Yes, guys, we're back on the Edge podcast. We've got two people with us today. Now, this is Aston and Adam from AF Property. I don't actually know too much about what they do. I'm saving it all for this, so it should flow nicely. But I know that they've built an impressive property business. So if you want to get into property or you have any interest in the space whatsoever, or you're already involved, this one is for you. So, guys, thank you for coming on.
Oh, thanks for having us, mate.
Thank you very much. It's been a long time coming, hasn't it? We've been in touch it's probably been a while now, hasn't it?
Yeah, a couple of months, I'd say.
Yeah.
But yeah, it's been busy.
That's what we like to hear.
Yeah.
So, guys, we always start from just your background. So, where did you both go to university, and how did you get into the space? If you want to just go through that.
Yeah, sure. So, yeah, to be fair, we both went to school together. So we went to school in Bolton. Adam went to university. Went to Uni of Leeds.
Yep. What did you do?
To be fair, I did geography. What a weird sort of degree to do.
Useful.
Yeah. To be fair, I didn't know what I wanted to do. I didn't want to do sport or anything like that. Yeah. So did geography. I thought it was pretty rounded.
Yeah.
Didn't really like university. Yeah. I loved chilling with mates.
Yeah.
All the good stuff. Hated the studying after about 2 weeks, but just stuck it out, to be fair. Did a bit of a placement year. So I went and worked in recruitment in town.
Yep.
I don't know why recruitment, but it's just good for sales.
So many people get roped into recruitment. I remember when I was at uni, they were like, I think it was like maybe something like you can earn like up to 80 grand in the first year.
Yeah.
And like just that sales pitch of like, cause is it commissions like you can get?
Yeah, you get quite a low base and then commissions.
Yeah.
I think I did it. It's good sales.
Yeah.
You know, first day I was there, boss put a list of 200 estate agents in Manchester in front of me and just said, go win some business. And so it was very like full on.
Yeah.
I think I was probably about 19, 20 at the time. But yeah, just after uni, went and worked at the Hook Group.
Yep. Shout out Max. Max introduced us.
Yeah, I know. So yeah, worked with Max for around 6 months and worked at the Hook Group for about 2 years. Just trading websites, some pretty big brands on there. And then at the same time, we'd set up the property company in the background, and it was kind of like a side hustle.
Yep.
I'll let Adam go into detail about, I guess, how he started, because Adam was the first person to leave work and make the leap for AF.
Yeah, so like I said, I met Aston at school. We're really good mates. Lived in the same area as well.
Yep.
After sixth form, I went straight into like an apprenticeship type thing in insolvency, so finance.
Yep.
Dealing with companies that have gone bust and sort of selling off their assets and dividends to creditors, all that sort of stuff. Always just thought, on a basic wage, I thought, I could see myself earning a lot of money in it, but it'd take 10, 15 years. Always wanted a bit more money now.
Yep.
And it was actually my brother, who's business partner, Alex, just found a YouTube video about getting his property with no money. Went on a 2-day course down in Birmingham, and took, the course as a big sales pitch in the grand scheme of things, but there was a lot of good content you could take from it. And so we, when we left that, set up the limit company, got the bank account sorted. So that was there. Then we felt like we had to do something. COVID came along, all working from home. We were sort of spending time. We should have been working on the business. Main thing, trying to get investors to help us in property and stuff like that. And then, we got to a point where in August 2020, I handed my notice in, left work.
Nice.
From September 2020. And then, since then, I just grew the business gradually. You start off people are probably wondering, like, how do you start in property with no money? The first thing we started to do was sourcing properties. So you find an investor, find out what properties they want, usually down in London because they're busy. They're not going to trek up to Manchester or whatever every week for viewings and stuff. Find out what they want, go find it for them, hold their hand through the process, do the refurb for them, let it out for them, and then you just pay you a fee to do that. So we did that for a good year. Made all right money, just ticked over. It was nothing crazy.
How do you even start with that? Because for me, the initial question would be, how do you find the investor? How do you pinpoint
Do you know what? A lot of people don't even ask that question. It's weird. People just think it happens. It is
as simple as
it is a simple one for you. Connect to every lawyer, doctor, surgeon, dentist on LinkedIn
in London.
put your locations on London
Yeah.
and message them all.
Yeah.
Because they're all going to have a bit of cash.
Yeah.
And they probably all want to get into property if they're not already in property.
And if they're all in like professions like that, they're going to have no time.
Yeah.
Exactly.
And if, just send them a simple message. If you've got 20, 30, 40, 50K, did you know in the Northwest, Northeast, Yorkshire, you can buy a house for 100K? Most of these people are thinking
25K down.
Yeah. Most of these people are thinking like houses everywhere in the country, like £500,000 for a terrace. But it's literally as simple as that. It's just pure hard work, messaging on LinkedIn.
I was just going to say, how is that? Because I've personally never done cold outreach. But I imagine there's a lot of knockbacks.
Yeah, I didn't like it because you've got no track record. You've got to get someone to put a leap of faith in you. You've got to come across as there's no point in that first instance going, oh, I've done this, that, and the other, because I've got nothing to prove it. So we basically said, we were open on it. I said, look, we've not done it before. We're looking to get into it. This is the skills we have. We've got a project manager. So my dad is my project manager. Knows everything about the building game. He came up to meet us, the first investor, and he bought 3 deals of us in the space of 2 months when I left work.
And what's that sort of looking at money wise in terms of 3 deals?
So 10K.
Yeah, just about that.
And
it's not a lot of.
It
seems like a decent amount of money to sell 3 deals, but the amount of time it takes to get that cash, because he's got to buy the deal. We were different to other sources. A lot of sources take money up front. They're, in my opinion, are the shysters in the industry. How can you take money for someone when you've not even done anything?
You've not done anything.
And you're going to put it in a client account, not touch it when they're just spending it, aren't they? Let's face it.
So you don't get paid for a while. So that 10 months has got to cover you. That 10 grand's got to cover you for 3-4 months. You've got to support your wage. Not all of it's profit. You've got your business costs.
How long did with that process, from start to finish, what did that look like?
Just let's say you viewed a property and put an offer in. To completing on the property and getting paid, you're probably talking, after buying cash and stuff, 2-3 months.
Right.
And then we do the refurb for them. And we took a project management fee on the refurb as well. But then that's where the hard part, because if you for example, when you're starting out a business, you're doing your first HMO refurb, for example, you learn as you go. You're not going to know everything. So on our first ever refurb, we lost about 10 grand on it. But we made 10 grand in fees, but we lost 10 grand on the refurb. But the lessons we learned off that were crazy. And also, it made you sort of respect the value of money, and it made you learn quick.
And that's it. They're going to be the best lessons, and you've learned them from day one. And the thing with that is as well, you've maybe not made any money, but you've now got that experience that you lacked before.
Also, we'd never go back to the investor and ask for more money. We set a price. That's the price. We're not going to go back unless there's something really, really mad that we've not seen. We're not going to go back and ask for more money. We'd take that as a lesson. Next time we'll do it right.
We had a good relationship with that guy. Sold in them deals. He held the deals for probably over 12 months, didn't he? And then he came back to us and was like, I want to sell them now. So because the relationship was that good from the start, because we didn't go back and try and ask him for more money, he's come back through to us to sell the deals where we're going to get paid again on.
And that's it. I think I imagine with let's say you guys want to ask more money, I bet there's some people that will milk these guys dry for everything they can. And then they're not going to get that repeat customer. It's sort of that short-term cash grab, isn't it?
I think for me personally, I'm always, even if I deserve to get more money from them, I still feel reluctant to do it, because I feel like I've said that's the price. The price. Sometimes you have to. We've not done it often, but that was more at the start of the journey. Whereas now we'll move on to it, but it's all our own money. As in not our personal money, but investors' money in the business and stuff. So at the time, it's a lot to lose. But the reason we lost that money is because we did it to such a good spec, and we wanted to do the best job we could. So you got that track record. So the next investor that comes along and say, "Oh, look what I've done."
You've got a bit of an immaculate portfolio.
Exactly.
So what, in terms of you were doing that deal sourcing, how long did that period go on for in terms of your business?
Probably say we probably sourced for probably just short of a year. But I think after probably about 6 months, we realised that it's tough to take 3 people out of work. So Adam, Alex and myself, it's tough to sell enough deals in a month. I see people saying they've made 10, 20, 30 grand a month selling deals. I don't know how they do it.
As a one-man band to manage all of that.
It's tough. So
it's not,
we quickly realised, didn't we, that it's not a business model that we can grow. and everyone can make a load of money from it. So,
So that lead you into where you are now?
Yeah. So one thing we've missed is a lot of our property. Well, the main bulk of our properties are to be leased to housing providers in terms of housing homeless people.
Yep.
More of the going into care and stuff. So, say people with mental health problems, autism, children leaving care. So, it's for a good purpose. But with that purpose, it comes like a long lease from. It's all government backed.
Yeah, so
exactly.
You've got more security around the deal.
Yeah, you get a long lease, guaranteed rent. You've got no hassle for, say, an investor in London or whoever. But we saw that there was value in that lease, and that we maybe wanted to be buying them ourselves and selling them as a finished product. So at that point, we weren't. The market took a turn for the worse. It was hard to get deals. So we thought we've got to adapt quickly. So we started, the investors we sourced deals to, we started going to them and saying, well, we're going to do it ourselves. We want, would you be open to lending us some money for a fixed interest rate? And we actually raised $250,000 in a few months, and bought 3 houses, put the lease in place, and sold them quite nicely.
So when you're selling them as sort of these
up and running, up and running, buy to let, so HMOs with a government-backed lease in place. We just take them out to similar sort of people. We started then venturing into speaking to wealth managers, sales agents in Manchester, London, anywhere in the country, overseas. So I think our first client that bought 2 or 3 at the start was somewhere over in Hong Kong. We've done quite a lot of work of selling stock into Hong Kong.
Apparently, the apartments behind you, each floor there is owned by a different Chinese investor.
Oh, I bet.
There's a lot of people want to get their money out of Hong Kong and China. And they like UK property, so that doesn't surprise me.
My friend lives in, do you know Elizabeth Tower in Manchester? Have you heard of that? Yeah. I think his floor is entirely owned by someone from Hong Kong as well.
Oh, really?
So, it makes sense. What? So I think one of the key questions I wanted to get out of you today, I mentioned it just before we started filming, because I'm super interested in it. What did it look like doing that fundraising in terms of what did you have to prepare as a company? Like, I know you said that you just went out to your previous investors, but how did that process work? What did you have to show them, evidence to them? And
of course.
Through that journey, what does that look like?
Yeah, so the initial $250,000 we raised was just loans to the business. We have to provide personal. We're quite lucky actually, because we had that trust with the investor already. They weren't so basically saying we want a charge over the house or I'm not lending you the money, where they're happy with PGs and stuff like that, and they trusted us anyway. So, it was basically, we agreed an amount that they wanted to loan us. We give them an agreed interest rate, usually, around 10% a year. And then, we just draw up a loan agreement, say, right, these are the terms. And then, transfer the money, we go buy the house.
So did it involve like any sort of meticulous pitching, or was it literally just an informal chat?
It's because you've worked with them before. You've already got that relationship. It's just WhatsApping. Literally, so we've got an investor who's a pilot in Dubai. I've never spoke to him on the phone in person. He's bought a few deals off us, and he's loaned us $70,000.
And it's just through WhatsApp.
I never spoke.
I've never spoken to him.
I don't know what it sounds like, anything, but it's a good service. I think we take him risks as well. Like, for example, my dad. We needed some cash at the start. I got my dad to remortgage his house. He gave us $150,000. So again, that's a risk on our part. Because take that, and then it's taking family money.
You've got from like a personal, like that personal in debt.
Oh yeah, like if I lost that $150,000.
It scares you.
My mum or dad would be very happy. But we've done a few things like that where you just, if you're confident in the product and the service, and you're confident in every step of the progress of the deal and things like that, then you're going to take those risks.
And look, they're not gonna lend us money unsecured if they don't trust us, are they? Let's face it. And if we've not done it before, got a track record, they're not going to do that.
And I think again, this stresses like we say all the time in the podcast, like the importance of relationship building, not burning bridges, and not ever trying to do a short-term cash grab. Because if you'd done that, none of that would have been possible, would it?
No,
exactly. If we did, when we're sourcing them deals, if we did a below par refurb, or we didn't get them the rent we said we'd get them on the lease, like, you know, they wouldn't use us again, and they won't be open to the conversation of lending us money. So yeah, 100%. You've got to value a relationship over a quick buck, definitely.
For sure. So you got that initial amount. So it was 250k, wasn't it?
Yeah.
So what did that look like? You've got that 250k pot. Where did you go from there?
So we've got 250k. We actually bought 3 houses in the northeast, refurbed them, put a government-backed lease in place, and then we sold them as to a finished product to a Hong Kong buyer.
And
that sounds very simple. There was a lot of hurdles in the middle of that.
I was just going to say as well, how do you even go about getting a government-backed contract for something like that? Because if it was me right now, I wouldn't even know where to look, where to start. How does that process work?
So to be fair, we fell into it. So the first investor that we ever got from LinkedIn, the guy who Adam said took a leap of faith in us. He kind of said, I've been doing these sort of government-backed contracts in the northeast, and we were like, all right, that's interesting, because we were just going to source them a standard buy to let. And then he was telling us who was leasing the properties and how to get in with them and the sort of refurb standard you've got to do. So he kind of like guided us. You know, he took a leap of faith, but he was putting his money with us and his trust, but he was kind of telling us what to do at the time.
Also, like,
so we got
mentoring you a little bit.
So we got very lucky in that respect.
And because if he mentors us and puts time into us, he just knows we can just keep finding deals.
And then at the end of the day, he's sort of building you guys to be his perfect sort of guys to do business with. Because he's going to be like, these guys now know exactly what I want, what I'm looking for, and then you can just do everything to his needs.
And again, I had a call from his brother the other week saying he's got, you know, a 3 million portfolio. He's like, if you've got any opportunities, happy to refinance that portfolio and put money in. So that, you know, that wouldn't have happened if we didn't provide a good service at the outset.
Yeah.
But it's just a lot of time and effort as well. Like building a property company, it probably looks all like glamorous, like property. Everyone wants to get into property. Like it's tough. There's a lot of groundwork that you've got to go through. Problems. I think even finding contracts, you know, got to make 100 phone calls before you even get one person to say, yeah, let's have a meeting. Yeah. Especially if you're young. There's a lot of people in property that, if you're young, like Adam said, you've not got a track record. So it's tough to even get.
And it's even like you said about the banks before, didn't you? Where like they just thought you were 2 young lads, and they're like, nah.
Yeah, exactly. They see the numbers that are going to go through the bank account, and they think, nah, it's not true. You can't open a bank, and that's a problem with.
Yeah. So what sort of hurdles have you faced so far?
So initially it was, I guess it was the business plan of sourcing deals. That was tough because you were never making enough money to grow it and get all 3 of us out of work. But then again, that led to a great opportunity in getting investment into the company, which was good. You know, refurbing. So last year, for example, we refurbed. So we bought, refurbed 50 HMOs. So that in itself, like refurbing 50 houses in 12 months is tough. There's a lot of hurdles with builders.
50, you know, that like sounds like fuck that number. Like I couldn't even imagine doing that.
So it's like 200 but again, rooms.
Like, I mean, we'll move on to the questions about the investment. So that $250,000 that we borrowed was just loans from other random investors. Now, when we finish sourcing and we're proving the model where we can buy, lease and sell, that one of the investors who we sourced deals for bought into the company. And then now funds us going forward.
So he was an investor to start with.
So
what money did he inject? Can you say that or not?
Yeah, so he bought 40% of the company, and that was for around 170k, which the business had no value at the time. He was looking at future value, but that was purely working capital to get us all out of work, or at least an office. And then, it was basically 2 years of covering costs. So that if we made nothing in the next 2 years, we're all still there. And then he would introduce funds so we could go and buy all these houses ourselves. So the 50 houses we bought and refurbed and leased and ready to be sold are all funded by him. So he's currently putting £3.5 million quid.
Wow.
Unsecured as well.
Wow.
So, but he's a shareholder in the business. And now we're in the process of selling them, so we'll make our margin. Pay him back with a bit of interest.
And how much would he look to get back on that? that total?
Because he's a shareholder a lot less than what we give, say, the other other investors. So you about 4%, just above what you get in the bank.
But it's still a decent amount, isn't it?
Yeah, it's nice.
At the end of the day, he's still part of the business.
Yeah, and he's still getting his share of the profits at the end as well.
So I've got this is a question that's probably more personal to me, but how did you feel actually about selling part of the company? So for me, when I first started, within probably 2 or 3 months of running, I got an offer for someone to buy 30% of the business, and I almost took it, but didn't. I've always been like, a lot of my sort of people that I went to university with, they all work in investment banks and stuff like that. They're like 100% equity, keep. Now, I always have the idea in my head is that if I would have took that deal early on, would have I accelerated way further? Yeah. And that's probably something that you guys have experienced. But was it a hard decision to actually sell it, or was it? Did you ever consider, right, I want to keep 100% equity and I'll try and fund another way? Or was it an easy, yes, let's just do this and grow?
I think for us, it was an easy yes.
Yep.
Because of where we were at the time.
Yep.
You know, he's saying, I'm going to inject that money, you know, I'm going to give you basically a 2-year buffer where
we're still in work.
Yeah. Aston and Alex were still in work.
9-to-5 jobs.
We had no office.
Nothing.
We were having to raise money. You know, he loaned us 3.5 million. I'm just like, I just ring him up. Can you transfer us another 100K, please?
Yeah.
And he's like, yeah, there you go.
Yeah.
And it's to raise 100. Imagine raising 100K elsewhere. The time and effort, the security that they'd need. Like, it's painful.
Yeah.
So we went from doing, sourcing 10, 12, 15 deals in a year to buying 50 properties of our own, refurb and leasing. So our when he bought him, we had to do like a business plan for him. We said the aim was to do 12 properties that year. We did 50.
No.
So that's acceleration for you.
Definitely. Without that, I think it'd be so easy to sit here now and say, oh yeah, I wish I owned 100% of the company or 30. But it's kind of like, well, where we are now, it would have taken us probably 5 years to get to. Which easily. We've got there in 12 months. And that's just because we sold part of the company. But I mean, Dave, the investor, he's a good friend as well. Do you know what I mean? He helps. He's sold businesses for tens of millions of pounds 3 times.
It's the guidance of
and so that's what I was going to say. So for me, since this, I've had VC firms come and want a piece of the pie, want conversation. For me now, I'm not interested in someone coming out and buying part of the company for money. For me, it would be the guidance to blow this company up. Now, what sort of, let's say for you guys now, if you were taking on, let's say it doesn't have to be the investor you've already got. If you were going to take on another investor, what sort of qualities would you guys be looking for in order for them to mentor you guys and accelerate you even further?
Yeah, there's one really, really easy one for me, and that is because Dave's a friend of a friend. I don't have to. It's just easy to do business with him, and easy to. If I need someone, if we need to buy an house, it's WhatsApp. Whereas if you get a big, say, sort of institutional investor, like the amount of process you're going to go through to do easy things. You do something they don't like, they can have you for it. The contracts drawn up will have you, and your balls nailed to the table. In essence, you can't do anything else. So easy to work with, but then again, you can sort of give a bit of that if they're investing a lot of money. Like, so for example, a bonus of having Dave, he's made a lot, when he's done funding rounds before, he's made a lot of other people money. So he's able to put us in contact with more people who have a shitload of money. And we're having meetings with like family offices and people who've sold out for £500 million. And they're like, well, I want to buy in. And it's like, well, there's not enough to go around, is there? So it just depends on how you look at things and whether you need the guidance and the scale, because it can be daunting.
I think I'd struggle selling out to an institution or a VC. Just because of that. Like, I feel like it has to be a friendship in a way. Obviously, there's boundaries because they're injecting cash, but you have to be able to pick up the phone and talk about your problems. And talk about when shit hits the fan. You have to be able to pick up the phone and say, get into the office now. We need to sit in a room and we just need to bang our heads against the wall.
And I suppose it's easy as well because, like, let's say, so I used to I interned at M&G Investments, so they had like the property side of it. And the thing is, like a company, let's say if you went to a big institutional investor, they've got shareholders that they're also accountable to. Like, whereas this guy, it's just his money, and he's going to be willing to sort of get stuck in to fix anything straight away. With these big institutional investors, I imagine it's more like it's going to take them probably months to action anything. They're then thinking about protecting their shareholders' best interest, and it's whether they're going to pull out or whatever.
Yeah,
like you've not got that same personal relationship.
You're definitely right in that respect. But also you've got to think like, say having that relationship with the Dave. Like at the time we thought, he's got loads of money. 5 million quid's a load. Yeah. Now 5 million quid seems like a drop in the ocean.
Yeah.
We need tens of millions or even hundreds to get to where we want to get to.
Yeah.
So you're not. Are you going to have that pally relationship with someone who's going to put 100 million into your business? Yeah. Probably not. Yeah. You're going to be tied down in contracts and articles, and there's going to be no stone unturned. Their lawyers are going to be on you.
Yeah.
So you just got to weigh it up. You've got to see where you want to get to. Yeah. If your vision aligns with theirs, then great.
Yeah.
You need to make sure that they're driven as well. Like they just don't. You need to make sure that they don't want to put money in and just get a return on it.
So that's what I was just going to ask. Is Dave completely passive, or does he have an active hand in running?
Active?
Yeah.
So he's on calls with us. He's like, as in, say if we have a big call, say if we're meeting commissioners at councils, 3 young lads walking in.
Yeah.
You've got to spend the first 20 minutes trying to win them over and tell them that you're not bullshitter.
Yeah.
That you've not, we've got a 5 million portfolio. They sort of don't take you seriously.
You need that respect that comes with age.
Yeah, exactly.
100%.
But Dave walks in, you do a quick Google search. He sold his business for that much. Right, okay, now the real these.
Yeah.
So that helps as well.
Yeah, and it's just, and again, I think that's another thing that people won't necessarily think about, like just basically building a business that's got credibility from all angles, even when you're about to walk into a room and have a meeting with someone.
Yeah.
Because it's still, even with me, I don't enjoy it now. Like I went and did a pitch on Monday this week. And I literally walked in, and they were all people probably late 30s to 50s. And I walked in, and they were just like on me like dogs. And like, it was as if like, just asking me questions as if like they were like, I'm going to have him here, I'm going to catch him out. And obviously you can answer everything, but it's still like, I feel like they come at you at a slightly different angle because you're younger, and it's like, I can trip him up, or there is going to be something where he is trying to pull the wool over my eyes here.
Yeah.
It's like not
very
trying
true.
to do business.
True, but 100%. One thing we always say is like, you could go the tried and tested model, someone who's been and done it before, but there could be set in their ways.
Yeah.
Naivety is very good in some circumstances because you could have a completely different outlook.
Yeah.
Look, we're in property, we're in the space.
Yeah.
Dave, our investor's he's a techie.
Yeah.
He builds tech businesses.
Yeah.
So there's certain things that he knows in that space, but we're so in the business.
Yeah.
He could come in with a completely different view. It's like, I've never thought of that.
Yeah. And that's it. What's happening with that deal that I was on about, I met with a CEO, and they've been so structured in their ways with what their organization does. I went and pitched to him, and he was like, fuck. Like, he shook my hand 3 times in the meeting. He was like, we are doing a deal.
Yeah.
He was like, this answers all of my problems, and we thought that we would have a solution like this maybe in 2 years' time. You've brought it me pre-packaged today. And never expected it. And that's it. It's where, like, I think the younger people, we're more flexible, more dynamic, and we're also, I think at our age, like let's say with Dave, for example, you guys are so open to just learning from him and consuming all of his knowledge. Like, I'm not naive to the fact I'm only 25. Like, aftermarket is my first proper business. I want to soak up everything like a sponge from everyone. And where it's the older people that are probably a bit more hard shelled, it's like, it's my way or no way.
Yeah, 100%. Definitely. I agree with that. And I think you've just got to, I don't know. One thing I'd just say is, don't go with your old-fashioned sort of guy if you're looking for an investor. You need like Dave. He's late 30s. He's still young, still a lad. You want that sort of guy to be around.
Yeah, and get advice from. So where is the business at now?
So we're at a stage now where we're sort of in transition. Okay. We've grown from sourcing to buying our own houses. We're just at the position at the moment where we're exiting on quite a lot of stock. So we're getting rid of quite a lot of the houses.
What's the reason for that?
Just release more capital.
Yeah.
So get the money back
make your profit and
is
recycle
that
cash.
like a natural cycle to go through?
Yeah. So you'll buy it, refurb it, lease it, and then either hold it and refinance to get some money back in, or sell it. Because obviously if we're selling, you're getting all your money back in to invest in other
What
things.
determines if you're going to refinance it or sell it?
We've not refinanced anything at the moment,
Why?
just because we're young and we don't really want passive cash flow at the moment.
Just yet.
We just want
You're
we
more
want
aggressive.
cash. Yeah, we want hard cash so we can go again and do bigger deals. Where if we refinanced all this portfolio now, you'd make a good chunk every single month, and you could sit here for the next 20 years and get that.
Yeah.
But you're not going to be able to. You'd have to go out and raise money to do more deals. But you know, we're at the stage now where we're selling off a lot of that stock and we're going into bigger deals. So essentially, what we are is developers in the care space. So we'll buy buildings, we'll convert them into blocks of 6 to 12 flats.
Yep.
We'll work with a care provider, commissioners, registered providers to provide housing to the most vulnerable people in society. So like Adam said, people with autism, learning difficulties, even like brain injuries at a really top level.
Yeah. And so some of these apartments might be specially adapted.
Yeah, I was going to say that.
So, if, for example, if you're doing disabled, there's got to be a certain amount, like handrails, there's got to be light switches down further down so they can reach them if they're in the wheelchair and stuff. So, they can be adapted to suit their needs.
Yeah. But there's not a lot of people doing it, and I think that's why we're pushing into the space, because it's profit with a purpose. You're making a profit on the deals that you're doing, but we're not just out there delivering high end apartments, for example, that most people are doing. We're doing really, really good standard apartments, but for people that actually need it. Like the demand's crazy. There's over 15,000 people at the moment in hospital beds that are waiting to get out of hospital into accommodation that we're providing.
They're like on the borderline of they still need to be there, but they can't go home. So they need that intermediary place where they can get care.
But that's growing every single day. That's 15,000 today. Like it'll grow by 50 a day probably. But then when you deliver a scheme of 12 apartments, you knock 12 off, another 12 go on the list. So it's never going to be solved unless people, like us are pushing into the industry.
And being aggressive with your growth.
That's the main thing. We've gone from sourcing deals to, a couple of days ago, agreeing a new build site of 12 apartments with GDV of about 2 million quid.
Nice.
And, we want to build another 10 to 15 blocks of apartments in the pipeline.
Yep.
For the end of this year, it'll probably be in the region of 25 million pounds.
Are you talking about building from scratch?
So a lot of what we're going to do is conversions. And we do that anyway. But like that site Aston's just talking about is building from the ground up.
Right.
Again, whenever you do something for the first time, this isn't a 100k house in Lancashire. This is, a big scheme. If you're gonna fuck up, you're gonna lose a lot of money. So you need to get the expertise around you. And
how are you finding the people to advise you on that?
Really good, to be fair. So
how do you actually source them though? Let's say so.
Right, okay.
How are you like? Again, it would be another thing where I'd be like, no idea. If I'm building something from the ground up, where the fuck do I start?
Yeah. So you've got people who you're gonna need who know people. So firstly, you need your architects. He needs to go and draw up your plans. Are you going to get accepted through planning? And he works with, and then naturally he just works with a lot of contractors. So he could pass you a contractor who's really trusted, stuff like that. So just being in the space, you find people and opportunities arise. So that's the way you do it. You need word of mouth. Yeah,
spider web effect. Like you can meet one and then pass.
Properties like there's so many different, I guess, little niches within it, but everyone kind of works together. I think a good point there is Dave, the investor, he introed us to our architect.
Got it.
And our architect has then introed us to QSs, surveyors, planning consultants, like everything. So like that's probably another value that Dave brings. Is that he's introed us to somebody that he just knew who was a mate. Never worked with him before, but he's a mate. Who owns a big architect firm in town. Literally sat with him before this podcast. But just making intros through people that you know. But being in the industry for a couple of years, you know people through LinkedIn.
And you know people doing the same thing as you or similar things, and property. In other industries, it's very strange. Where other industries is very competitive. People don't sort of like working if they don't like each other. They just want to be better than each other. Whereas in property, people are actually open to helping people out.
Everyone wants part of everyone else's deal.
You can take a cut of, if you intro me to that guy, you can take a fee, or if you bring this to the party, you can have a percentage of that deal. There's enough in it for everyone. Which is quite nice, but strange because you think you'd all be against each other fighting over different sites and different builders and stuff like that.
Nice. So you've had 3.5 million. That's correct, isn't it? In terms of investment.
Yeah.
What sort of the value of the properties? Like once let's say you've sold your portfolio, where do you think you'll be at?
I'm hoping to, make a good 25% on it. Nice. Profit, which would be nice. And then just go again, recycle that cash and go again.
And so what does that, in terms of the life cycle of that, like how long is it going to take you to offload those 50 properties, get going again?
So we've done them all. So what we've done is, rather than sell them off individually as we go along, batch them all together, try and get them off in one go. So, took us a year to do 50 properties, and then to sell them, you've got to find, in the process, you're trying to find a buyer, and then you've got the sales process. So, you're talking 15 months maybe.
Do you work with any sort of corporate firms when you're trying to sell? Because, so for example, in my old job, I used to work in M&A, and one of the deals I was working on was a guy who was like 80 odd. He had a portfolio of I think it was like 30 properties, and we were just assisting him finding a buyer for those properties. Do you guys go to actual corporate firms, or is it just your network?
So
big time. Yeah.
We've got so we work with wealth managers. We've got a partnership with one wealth management firm. They've got like 5 offices around the world, all major cities. We work with London office. They've got about $2 billion of asset under management. So a big firm. Loads of clients. So they've got clients that buy our stock. Obviously, it's a great investment for an everyday individual. They've also got access to like institutional funds who they can essentially, we'll pay them a fee for passing our stock to them, and they'll buy it and we'll just pay them. But contacts like that have been great for us. Another thing we should touch on is we're not just selling stock through these parties. We've actually in the last 3 months raised a bond through them. So we've raised about £1.8 million at the moment just through their client money. That then goes into a joint venture pot between us and the wealth manager, and we'll then go out and do exactly what we're doing. But essentially we're just working with other people as well to raise more cash.
Which is a good option whilst our 3.5's tied up. You've got, you can go and raise more money through them or through somebody else to still do projects, go 50-50 on it. And then when your cash is back in, go again, and the projects you buy with that, you've got 100% of that pot. But it's just, it's about scale. These guys can raise money at will, as long as, we do a good job with it, which we will do.
How did you, so in terms of scaling, because when you've just been saying, obviously you've got a lot going on. You're trying to get rid of those properties. You're then going to be buying properties. You're doing these developments. You've got that joint venture fund. How did you scale the business in terms of, let's say, hiring to sort of be able to manage all of this? Because it sounds like you've got stuff going on everywhere. How do you get to that point? How did you find that process?
So one of the key things is when our investor came on board is he says, this needs to run like clockwork and it needs to run without you guys in it, which means, so that's value and IP. So, if someone comes and buys the business, you're not as crucial as, you're not the brand in essence. So we initially hired, so we had us 3 business partners, my dad's the project manager, and then we hired another project manager, an operations manager, an assistant, a finance guy, and an acquisitions guy. So there's 9 of us in total. But so that was to do the 50 HMOs, because doing 50 of them is, as you said before, it's tough graft. So problems arise every day. So we needed that back office function to be able to do that. Now we're moving into the bigger stuff, so less project but bigger value. We probably don't need as big a back office as what we've got. So we've had to get rid of 3 people recently just because the vision of the business is going in a different place. But there again, there's another thing that people don't realize. You've got to make tough decisions, which isn't nice at all.
I was just going to say that. How old are you both?
25.
25. So how have you found that side of the business in terms of actually being responsible for people? You're paying people's salaries. It's a big thing, a big weight to have on your shoulders, isn't it? And then having to let go of them. What was that like?
Horrible.
It's rough. It's very rough.
I mean, the first thing I'd say is when you're hiring staff as well, you've got to, again, it was like sort of friend of friends who you'd hire, because it's hard to get when you've got no real track record at the outset. It's hard to get people to join you, and
you can't hire talent
You can't hire talent at the outset. You can hire talent, but you can't hire industry experts, let's say.
You can hire talented individuals who've got a good personality, good work ethic that you think will fit the culture. Yeah, which is exactly what we did.
You've just got to find people that you can basically mentor into a position where they become extremely good.
Yeah, and also we're entrepreneurs, and like yourself, we are good at certain things, and we're not so good at certain things. And you need people to come in and do the stuff that you're not good at. And usually it is the boring tasks, isn't it? And we're more of the business development people.
Yeah, I was going to say, like, I feel like for me and like I guess yourselves as well, like the main thing that's always in my head is like growth. But there's a lot of foundations that need to support that growth. And if you can have someone that manages all of that, that's just as crucial to even us actually trying to scale, because we won't be able to get there without it.
Yeah, of course. And then don't get me wrong, there is times like where, you know, payday's tomorrow and you're waiting on this property to sell today, and you're like, oh, you touch and go, like, whether you're going to pay staff tomorrow.
Yeah, it's literally been down to the wire a few times. It's in a sick way. That's quite exciting. Like it is. It's
not.
Yeah, no, it's horrible at the time. But like you always used to watch. When you watch other people's podcasts and you think like, God, I'd never get in that position. And you find yourself in that position. You think, oh shit. I don't know how people do it, but you just get through it.
And working under pressure though that's crucial, isn't it? Like for me, my business was like scaling month on month, super plain sailing. Barely had to do like any work in terms of ads. All through COVID, it basically just grew naturally and exploded. Now, in around about, probably starting from around about Feb last year, everything started to just tank, go downhill. And then for me, that was when I had to sort of get uncomfortable with it, get on camera, do stuff like this. And then actually start to have to put the work in, because I never thought when it was plain sailing, I was like, I don't see this ever going down. Like, I don't see myself struggling.
You know what? And then, we've had the exact same thing. Like, you're spot on there. And you know what? I've thought about it a lot. And like, as awful as them tough times are, like as awful as they are, you don't sleep at times, you don't eat properly at times, but you do things in them times that are going to shake your business going forward. Literally, when your back's against the wall, it's amazing what you'll do in that time. And that, like you, and that for you was getting on camera and doing this podcast. Yeah,
exactly. And like literally, because I was like always like a massive introvert. Like I would struggle to have a conversation with people, and whereas now, like this is my favorite thing about what I do, the podcasts. And now, for us, monthly recurring revenue is all-time highs. And that dramatic change has come from just getting your back against the wall and then fighting your way back out. And that's what like a lot of people, I think that probably comes down to sort of like that entrepreneur mindset as well, where a lot of people would throw the towel in as soon as they see it going downhill. Like someone that I know right now, their business is starting to tank a bit, and they're not doing nothing, and it frustrates me because it's just like they've just not got it in them to actually try and bring it out the other side. And if you do that, like you said, you shape your business for the future. And out of that period, I've had more deals and more sort of future prospects come out of that period than ever, because that's when you're doing anything.
We're the exact, do you know what? Them positions are the same as our business. Like, you know, these properties that we're trying to sell, we've had buyers pull out of them, like the full portfolio. We're like so close to completing and pulling out. And, you know, don't get me wrong, you sulk for a day. You do sulk. And then, you know, it might be right next Monday, bang, you're asked to, you've got to solve the problem now. You know, otherwise you go down. And you're 100% right. What you've been through is exactly what we went through. Like moving into the care space, you know, is because of the problems we've had in the previous space. So the space moving into is like regulated and stuff like that. So you do things that, you know, shape your business for the better. But even though it is awful going through that time, you know, when it happens.
I definitely think it's necessary for everyone. Like, it's definitely not going to be plain sailing. Like, I did think, I was like, I'm cushed here.
People used to say to us, like, it's going too well.
And
we used to think, like, people used to say, like, you need to go through the hard times. We used to think, like, nah, no way. And now we're going through it. It's like the best things come out of it. Like, I think it was something that when we were going through it a couple of weeks back, it was just horrendous. And I think I saw something on Twitter from Tate. Basically, it's like a chess analogy. It was like when people get in such a bad position, most people will think no point doing anything. Whereas in like a game of chess, it's always a best move that you make. There's always somewhere you can go. Like it might be a shit move, but it's the best option you've got. Most people will just stop.
Yeah.
But just keep making that best move,
Yeah.
and then you'll eventually get out of it.
Yeah.
Yeah.
And that's what
Yeah.
proper entrepreneurs do.
Our investor said, like, at the beginning, it was going plain sailing, similar to like it was for you. It's like, he was like, I want you to go through some shit. You've had it too easy.
Yeah.
And then, Ed, trust me, we've been through the shit. I'm ready for the reward now.
Yeah. And that's it. So what, right, for you guys, what does that reward look like? What's your plans for the future with the business? What are you looking to do?
I'd like the company to be known as a company where, care providers can go to and rely on to deliver a good project for people, like vulnerable people that need housing.
Yep.
That's probably the ultimate goal for the company, and scaling that.
Be the best in the space.
Yeah, just to have a good name, good rep.
People who work with us, you want them to think, oh, they're good lads.
Yeah.
Even if it doesn't work out, you think, nah, they were good lads. They treated us well.
Yeah.
We had a good experience with them. And that's the main aim. I mean, obviously, I do want to financially, obviously everyone wants to make money. And, if we can scale and potentially exit one day, happy days.
Yeah.
The freedom of property as well. Like, property is a weird space. It seems like we've got loads going on, but property's slow. Day to day, we can be sat there in the office with nothing to do.
Yeah.
But we own 50 houses, and there's 50 houses getting refurbed, there's a £10 million pipeline a block.
Yeah.
But there's nothing to do.
Yeah,
property's just slow.
Because you're
slow.
You're basically on other people's time schedules as well.
Exactly, solicitors and things like that. So I think creating more freedom, building a good team, staying in the industry, and just creating more freedom for, I guess, ourselves to be able to just go and enjoy.
And having a good time whilst you're doing it.
Yeah.
I mean, because, we touched on it. I'm sure you're the same. Like, you're probably never happy with where you are at the moment. And there's a saying I used to always say, like, in my vocab, I'll be happy when this happens. Yeah. I'll be happy when these are at work. I'll be happy when we get an office. I'll be happy when we've got staff. I'll be happy when we've got 50 houses.
Yeah.
But that just changes.
Yep.
You're never actually that happy when that happens.
Exactly. That's it for me. I remember I was like, I'll be happy when I hit X amount of subscribers. Happened. I was like, nothing's changed. Right. What's the next goal? We hit like a revenue goal that, like, when I started, I never would have imagined happen last week. And then I was like, brother shook my hand, was like, congrats. And then he was like, back to work. Like, where's the next goal? And then we set the next one because it's like, I think you always think like, this will make me happy. But when it happens, you realize that you've got that sort of, let's say, hunger inside of you that's still not satisfied. You've got to go for the next leg up. And
I think it sort of takes someone else to tell you, like, you remember where you were at that point? Like, you were there, it was you and your dad, only ones out of work, doing it, struggling, losing money. And now now at this point, you're like, all right, we've done it.
It's
has been decent.
And that's what the important thing, because when you're in the thick of it, you very quickly forget. It's the people that, like, for me, it's like my parents. Like, my mum will always be like when I told her the news, she was like, fucking hell, like, I remember on that first day when you launched the company and I did like this massive glamorous marketing campaign and we made 30 quid.
Yeah.
And I was like, and we went out to dinner that day and it was my brother's birthday. My
30 quid budget.
Yeah, my face was like slapped ass. Like, I was just like, so like gone. And they were just like, trust the process. And then when we hit that goal, my mum was like, do you remember that day? Like, and she was like, think of all the stuff that you've been through in between. Like, and then she like labeled all these like big life events, stuff that's happened with my family and stuff. She's like, you've built this whilst going through all of that. You need to actually reflect on that. Whereas I just like tunnel vision, don't think of it, but it is important to do for sure.
Yeah, 100%. 100%.
The thing that I always do, like, and I always think to like sort of people like Tate, like, always be like super rational in these situations. And like, you put like, when I worked in like investment banking, and it was like, when you think of like people that like traders and stuff, like, you need to sort of have no emotion. You can't be like emotionally attached, because then you're going to be erratic with what you're doing. You need to try and have a level head at all times. And for people like us that are young in the game and the space, and when new events are hitting us that we've never encountered before, it's very hard to do that. Like, and that's why I guess there's a lot of value in someone like Dave, where he's probably been through all that before, and he can be like, lads, chill, it's going to be sound. We're going to get through this. And that's where, like, even like some of our competitors that I was speaking to you about, who I'm friends with, like, when shit's hit the fan for me before, like, we were in Saint-Tropez with them, I was having a meltdown at the table, like, loads of stuff was going wrong, and I was just like, fuck, and they were like, lad, chill. Like, this has happened to us before, you're going to get through it. And then one of the other companies I own a share in, that's similar. Their business so went through our competitors, then went through me, and then it started to happen to the other business I've got a share in. And this guy like fucking flipped his shit like I did. And then I was like, mate, chill, you're gonna be fine. You get through it.
But when it's you,
yeah, exactly. And it's just that learning curve that we all have to go through, isn't it?
Yeah, I think, like I say, with Tate, he does come out with some. You don't realise until you're in them periods. He does come out with some good nuggets of info and that do help you through.
Yeah, the guy's
time.
super motivational.
Yeah.
Like,
to be fair, like some of them things in the last month or so,
got through it.
We've sat in their meeting rooms just scrolling through, like just reading them, thinking like, that's true.
Yeah.
And then we've always sat there and just thought, like, what's the worst that can happen?
Yeah.
What is the worst that can happen? And you've just got to get back on it. You've got to be relentless.
Yeah.
That is literally probably the main thing I'd say.
Yeah.
Just don't let anything.
Yeah. And
when you're back against the wall, that's when the best stuff happens.
And also with us, we're quite different, as in you've got the sales background, I've got the corporate background. You know, I'm quite hurdle. I need to solve that problem before I move on to the next.
Yep.
Whereas you can quite easily look past it, go look for into the future of that without overcoming that hurdle just yet.
Yeah.
But it works quite well actually.
Yeah. And it's also about, it is just being a risk taker. Like every single entrepreneur has to like harbour an element of risk in whatever you're doing. And it got like, again, another one of the sayings, it's like your boss will never pay you enough so you can live next door to him. Because whenever you're working for whenever you're working a 9-to-5, as horrible as it sounds, you are lining someone else's pocket.
Yeah.
That's what it is.
Exactly.
And that's because they've taken the risk.
Yeah, exactly.
Therefore, they get the reward.
Exactly. And that's what, have you seen that? Have you heard of that Ben Shapiro?
Yeah.
Yeah.
So have you seen the clip where he's talking about the
good.
pencil factory?
Yeah.
Yeah,
So
that is
true.
perfect.
Yeah. He's some
Yeah,
nice.
exactly.
And somehow people still disagree.
Yeah, exactly. But it is. Someone's got to do it, and you can't be angry at the people that do it.
Yeah. 100%.
Yeah, at the end of the day, if you, like I say, you like you just said then with your clients, you know, if you've got 10 grand to start, it's a lot easier, but it's easier to, you know, maybe put 5 grand into a shit product.
Yeah.
And so the risk is also there.
Yeah. Exactly.
It's just risk and rewarding and diversification as well.
Yeah.
Don't put all your eggs in one basket. Definitely don't do that.
Yeah. Have you done that before?
Yeah.
Yeah.
And
Yeah, what happened there?
just, you know, like even in, you know, doing all HMOs at once and stuff, and you know, maybe all with one provider and all, you know, and stuff like that. It just, you know, if say buyers don't, the market goes where HMOs aren't wanted anymore, and we've got all HMOs, we might not be able to sell them, for example.
Yeah, I think it's key in any company, innit? Just make sure you're diversified across different industries.
I remember, like, even that was probably one of the only things I took from university when we did like so I did finance at uni, and we studied like portfolio theory, and it was just basically around diversification and the importance of doing it. And you could take that lesson and apply it to absolutely anything business wise.
Yeah. I think like it's so easy to, like, we didn't diversify enough. For example, we just cracked on doing HMOs.
Yep.
Because it was easy. It was going well.
Yep.
And it's so easy to be like tunnel vision and go, I'm just going to crack on because it's working so well. But soon as something switches and it doesn't work anymore, then you really are in a shit.
Yep.
So like early on, like now especially, we're shifting to where the market is. We'll do a few HMOs. We'll do some blocks. So therefore, if one of them goes, we've still got the other one.
Yeah.
Same with having different sources of like funding, having different buyers lined up for different stock, because you don't want to rely on one person to buy all your stock, because if they don't come through, then, you know, there's been times where we've lost 3 months in legal selling a property with one buyer and they've not pulled through, where we've just wasted 3 months of doing BD and finding 20 other buyers that could have bought it. And because we stuck with that guy and we just took it easy, when he didn't buy, we then had nobody.
Yeah.
Whereas if we diversified and spoke to 20 different people, if he pulled out, we could just replace him with somebody else.
Yeah. And I used to work in insolvency, so I know, like, I used to deal with companies that went bust. And you know, the biggest reason why a lot of companies will go bust is because they're reliant on one major client, like 90% of the turnover.
Yeah.
But even when I was in the business, and we did put all our eggs in one basket to an extent, because it was just the easy thing to do at the time. So I do get it, but you know, no matter how well it's going, and if it might be really hard to do that thing where you need to diversify, but do it.
Yeah.
Because otherwise you could get stung.
Just spread your risk as far as possible, don't you?
Yeah.
And even like I've done that in terms of just with businesses, like I'm at the point now where sort of the dividends that I get from companies that I have covers my wage in my 9 to 5, and I don't have any active role in them. And that's like another angle of spreading your risk. Yes, I'm going to work on aftermarket full time, but in the process of doing aftermarket, in sort of maybe about 12 months ago, I started to just tinker with some few other things, help some other people out with stuff, and then know that I've now actually got an income coming in that's passive now.
Yeah.
Don't have to think about it. And I know that if shit does hit the fan, I've still got enough money coming in that I can live on. And we touched on this before the podcast about like risk taking. And you can always go back to that 9 to 5.
Yeah, you can.
I think this will be an interesting thing to go into now, because we've all took the leap from the 9 to 5. But firstly, how did you find that transition from going from your 9 to 5 into your business full time? What was that like for you two?
I found it pretty hard.
Yep.
Probably harder than most, because I like routine, I like structure.
Yeah,
I was in a corporate environment, and you know, going from right there's a task, just do it, to sat there thinking, what do I do? It was tough. I didn't feel like I was doing busy. I didn't feel like I was doing anything.
You wasn't as productive as you could have been.
Yeah, like for example, I used to do 9 to 5 at work, go to the gym after, you know, tea, walk the dog, bed.
Yeah.
And it's like, well, now I could have a meeting at 5 o'clock and not be able to go to the gym at that time. And like, I've just found the whole dynamic really difficult. But you do come to terms with it, and you learn to cope with it better. But now that we've got like office staff, you get more of a routine.
Yeah.
You've sort of almost built a mini corporate environment. Like there's expectations in place. You've got to show up for work. Other people have got to show up for work.
Yeah. But don't get me wrong, it's our business and stuff. It's like, it's as if we're 25, we're young, we like a laugh. It's probably one of the best places you can work. You know, we just play darts a lot of the time. And,
we always say, didn't we? Like we knew what it was like just working for like 2-3 years. Well, you worked from a younger age, like you know what it's like to have a shit boss. And like you know how shit that makes you feel. So therefore, like, you know, like Adam just said, our offices, it's good crack, it's chilled.
Is everyone like, what's the demographic like? Are they all sort of your age or?
Strange, really, because we got quite a few youngsters our age, like finance and acquisitions our age, and then operations, you know, mid-40s, and then a project manager's around late 50s. So there's a nice little mix, but it, you know,
it suits the roles though, doesn't it?
Yeah, it does.
So like the salesy sort of people within a company are people that don't really have much kind of like commitment outside of work, therefore they can go out meeting clients and things like that. The more like operational sort of people, the people that have worked for a longer period of time, maybe a bit older, just because they've got more experience and they know how to do those sort of jobs. So it's a good mix.
Good. And so on that, about leaving the 9 to 5, what was sort of the trigger point for you guys in terms of, right, now is the time to jump ship?
We just, like I said before, when we had investors on LinkedIn that, you know, wanted to buy deals, we thought, well, can't go to viewings 9 to 5, Mondays to Friday. So, you know, everyone's going to try doing them on Saturday. It's just going to be impossible. So we thought, look, let's just take the leap. You know, I took the leap. So, you know, I'm sure if we made no money, we'd all be chipping in to help out. Luckily, we made a bit of money at the start and it was fine. But yeah, it's it was tough going from having a set income to potentially nothing. Nothing.
Like a lower income as well, wasn't it? For you?
Yeah, it was the lower income.
For me, the decision was made easier with investment coming on.
But
I think that also triggered, like, I think without that investment, then Alex and I wouldn't have been able to leave. We just didn't have enough income in the company, or like steady enough income to do it. Like I've got a house with a mortgage, so I'm obviously,
you need that.
I have more commitments than most people do at 25 who are either living at home or renting. So I had a bit more commitment, so it was a harder decision for me. But we'd been working at it for like just over a year, and you'd done a good job getting it off the floor, so it just happened at the right time with the investment coming in.
And it is interesting looking back, like, if we didn't take that investment on, where would we be today? Just like, it'd just be interesting to see.
You know,
I think we'd be on the path to where we are
Yeah.
but I think we'd be nowhere near.
10 steps behind.
I genuinely think it would be like 10%.
Yeah.
Probably. Well, how did you find it?
In terms of the
Leaving the 9 to 5.
For me, again, I was routine. So this was literally my routine. So I would wake up at 6. Because I was studying to do chartered accountancy at the same time. So I'd like study from like 6 till 8, work from like 8:30 until 6. Then I would study again from, let's say, 7 until 10, and then work on aftermarket from 10 till 12. Like I became like a creature of habit, but I didn't fucking leave my room. And that's when it got to that point where I was like, an interesting part of that. So when I did like I said, accounting and finance at uni, I got first in that, and I was like fine. I like was really, really good with my studies and stuff. Now, what I realized when I was doing my chartered accountancy exams, the first set of exams that anyone could do, this was entry level, I failed it twice in a row. And even though I got first, like they were, and then my job was on the line. And then, but for me, it was because I wasn't putting my whole into it, like all of it into it. And I realized that I had aftermarket sort of on the back burner, and that's probably where my passion more lay. Because I really struggle to believe anybody's passionate about accounting. Like, that is so fucked.
Is it? Yeah, but it's one of them. It's like, I'd say it says it a lot. Are you actually passionate about? Are you passionate about the other life, like the business and the freedom and the stuff like that? Or are you passionate about what you do? You know, like you said, like with the concrete guy. He's passionate about concrete. He's passionate about making money, isn't he?
Yeah, and that's it. And so for me, I built. I got to a point. What was you doing? I think we was doing. It got to a point where in revenue, the company was making sort of my monthly salary in revenue every day. And that's when I was like, I'm safe to go now. I found it took me a while to do it because I was always like really focused on, so I'd interned at like M&G, I'd interned at a hedge fund. My goal was always to go, so I basically got a job offer from this hedge fund. They said to me, get first in your degree, get 3 years in M&A, then the door is open for you here. And for me, that was like the best job. I was like, I fucking made it. Like, I got into that job at the hedge fund through networking. I went through like 8 different people to get there, just being introduced to new people, then got the golden egg at the end. And then for me, it was like giving up that was like a huge risk for me because it was like, I know I'm never going to get this opportunity again. The partner at the firm had like told me that I had to pick up like he said, one day you're going to get a phone call off my son and you have to answer that and you have to give him a job. Like, and I was like, fuck, like these guys actually want me. And then, so then to give that up to then work on something which again is a risk was massive. Like I didn't know what to do. I didn't know what was right, but supportive family.
Well, what I was going to say, what did your parents say? Were they all for it, or were they disappointed?
No, they were. Around that time, like we had like in my family, not my parents, luckily, but in my family, like a lot of people had like my uncle got like told he's terminally ill. Like lots of stuff that happened like overnight, where it was like fuck, like life's short. And then that was when my parents were like, you've got to do this now, like do it, like because life is too short to sort of ponder on it. And that's what made me sort of jump ship and just think, right, I'm going to give it a go. And
did you have commitments at that point, what week and stuff like that, or were you just living at home?
Just living at home. So I was lucky, I was fortunate, but I think a lot of people, because even like people like yourself with a mortgage, you know that you'll still make it work. And worst case scenario, you go back to that 9 to 5. We're all young enough to go back to the 9 to 5, and that's what you've got to remember. Like when I left my job, because I'd done such a good job there, the partner said to me, right, when I told it, like, because they didn't know anything about my business, and I was just about to do a documentary with the BBC, and I was like, right, well, so they're going to know. So I told them about it, and then they basically said to me, like, what the fuck are you still doing here? Go and pursue your dream. And if it all goes tits up, you pick up the phone, you've got a job back. But that's what I think a lot of people forget. They think that if they're leaving the 9 to 5 and going into to pursue whatever they want to with their own business, they think like it's all or nothing. But you know, you can bounce straight back. Like there's a shit ton of jobs out there. You might not start again where you left off, but it's not the end of the world. And then again, you can at least just live your life knowing that you tried.
That's
because
so true.
I mean, I hate that. Thinking like that what if moment, like I couldn't live like that. I'm always like very, very sort of focused around giving everything 100%. And it's never like, I don't want to leave a stone unturned, because it's then like, well, if I would have done that, could I have been 10 steps ahead now?
Yeah.
And that thought of regret is something that I'm scared of.
Yeah. People watching this probably like, you know, you lot have done it. It's easy probably to say. What I'd say is like, people are saving for a house deposit from an early age now. You've got to, haven't you?
Yeah.
So, you know, really, you know, by the time you early 20s, you probably, you need at least 10 grand between you and say, and your partner got 10 grand if you're moving in together.
Yep.
10 grand is probably 6 months' wages.
Yep.
Go and try, if you've got an idea, go and try it for 6 months.
Yeah.
And then at least you can resave that. If it don't work, go back to your 9 to 5, and then you can resave again. But at least when you're 70, you're like, at least I give it a go, and it didn't work.
Exactly.
People want like the perfect CV.
Yeah.
I mean, like people want like, people are scared to think like, it's probably school and university that say it like, oh, if you have a gap in your CV, you know, employers are going to look at it bad. Like if you have a gap in your CV of a year and you speak to an employer and they go, what have you been doing for that year? And you go, well, I tried to do such and such. And it looks so much better.
Yeah, you're a self-starter.
And the lessons they know you've learned in that period.
Exactly.
It's stuff that they can't teach.
Yeah.
Like, you're not going to learn from being in that environment because you're safeguarded and in a bit of a bubble. The reason I got my job at the firm I was at wasn't because of the experience of the hedge fund or anything. It was because I did reselling. That was the reason. The partner was like, what the fuck's this? And then he said to me in the interview, he was like, why haven't you done this full time? Like, why haven't you started a business? Like, it sounds like you should have an app.
Yeah.
And then when I came to leaving, I said to him, like, do you remember what you said to me in that interview? And he went, yeah, I planted the seed there, didn't I? I was like,
So you want to invest, lad?
And he said to me, whatever, if you ever come to exit, you know who your advisors are. So,
well, exactly. But there's, going back to the point of what one thing I think as well, which is flawed, is like leaving sixth form. It was like there was no other option but uni. They didn't even really go into apprenticeships or even being a joiner or sparking. Like, it was uni or nothing, and you were made to feel like you're a failure if you didn't do it. We were made to do our UCAS application even if we didn't want to go. It's like, well, but forget being a tradie or going to an apprenticeship. That wasn't even mentioned. Never mind starting your own business. Was mentioned.
Out of the question. Isn't it?
Like if I went into, you know, we went to private school and stuff, so. You know, a lot of kids there with a lot of money. I'd say, well, why don't you just borrow some of your dad's money, do a property up, give him a return. So he's winning, you're winning. Just give it a go. Like, I mean, we didn't rely on parents or anything, but you know, you've got to make use of your surroundings and stuff like that.
Sure. 100%.
That's what I'd say.
Yeah, for sure. And that's the aim of this podcast. We want to show people, like, because we get tons of people, like, one of our, like, I don't know what's happening at the moment. It's a bit weird. We keep getting like probably around about 4 or 5 messages a day. Hi, I'm 17. I'm looking to make money. It's people in like exact demographic, but they're like, oh, like, I'm looking to make money. Don't know how to do it. Don't know like how to go about doing it. And again, I think it goes back to that school. It's like, you go through like a win, like sort of a period of time in education where you think your only sort of outlets for work are maybe like a bar staff or your traditional university jobs.
Yeah,
there should be some sort of I don't know, training or exposure to all of the side hustles because you started as a side hustle, we started as a side hustle, and then look where we've took it to. That if there was something like that, I think people would be far better off than doing, let's say, like, I don't mean to bash it, but like, let's say you're a bar staff and you fucking pour pints.
But also you got to think, like, people are diving into degrees that they don't actually know they want to do because they feel forced into it. Like, mate, just take a step back, get a job for a year in anything, bar staff, earn money, think about what you want to do.
That's what I did.
You've got time. But one story I'll tell you is that at our school, it was funny as because all the teachers were a bit mortified, but the owner of AO came into our school to give a talk, and he was just he basically said, yes, GCSEs and A-levels are pointless, and the teachers was like, for God's sake.
We're all trying to stop him, like,
conversation. But no, they are important, aren't they? And it's like, well,
no,
they are for the next step. You know, look, if you want to, like, everyone says, if you want to be a doctor, like, you need it. Let's face it. But then again, I think one thing because I get the majority of this viewers are probably younger people looking to make money. I just say, don't dive into uni if you don't know what you want to do, because it's 50 grand. Imagine if you could spend that, and I know it's hard to get it, that 50 grand if you don't go to uni, but imagine just putting that into some form of business or just trying something else.
And that's exactly like me. So I did that. I took a year out because I wasn't exactly sure what I wanted to do. And then, so what I did was I I finished college. I applied to do biological sciences, but then realised I didn't want to do that. And then went into clearing. My method of choosing what I was going to do at university was scrolling and thought, what degree title looks most prestigious? Yeah. And then I seen accounting, business, finance, and management. And I thought that's going to open some doors. Yeah. But there was no real like thought to it. It was just always like, you've got to go to uni. But then I took a year out, worked, and then I worked in a job just at a gym. I was desperate to get back into education after that point. But even just doing that allowed me to talk, because I hated college. I hated it. Now, and I hated learning at that point and education. But because I took that year out, I had that reset to the point where I was desperate to get into education. And then, when I went back to uni, I didn't live the normal uni lifestyle. I barely went out. I was focused on getting a first. That was me. Like, I would just study. Barely had any friends at uni. Very, very small, like, close circle. And that was, but if I hadn't took that year out, I probably would have just dossed about. Yeah, and it's just about, when you're young, you've got that time. Like, just breathe. Like, relax about everything. There's no rush.
Yeah, I get there is desperation to make money, because I was in the same boat. I was like, all I wanted to do was make a lot of money early on. But yeah, take a step back, find some, try a few jobs out if you need to, and then just make sure you have a bit of time on the side to try and think of something. And I get, look, everyone's like, what shall I do? And obviously you teach Amazon FBA and stuff. That's an option. Yeah. But there's loads of things out there, and no one's going to say, that sort of thing's for you. Yeah. You just got to try and think of an idea, or, I don't know, go. Again, another thing I'd do is potentially find someone who's extremely successful and just try and work with them, just try and find out what they do.
And we was talking about this in the last pod where, so it's not aired yet, but we're saying, like, it's super interesting how the people who, let's say, aren't successful by standard measures, they won't be supportive of a lot of the stuff that you're trying to do. But if you find someone who is already super successful, like with us, whenever I speak to someone who's already made it in a different field, they've gone clear. Like, we're talking like one of the guys who sort of wants to mentor me is worth just under $500 million. And he heard my idea. He's like, fucking hell, like, that's amazing. Like, that is such a smart idea. But then and those guys who like achieve a certain level of success, they want to help. They want to give back.
They need purpose.
Yeah, they want to foster the development of the next generation. Whereas the people who are your couch potatoes who do fuck all are in your TikTok comments just trying to drag you down on everything and like make you feel fucking bad for doing it because you're not sort of working by conventional means. Yeah. And that's it. If you can find someone who's already been there and done it, they're going to be more than happy to help you and give back in any way that they can, because they know for a fact that they were once in your position with that hunger.
Yeah, and we say about successful people, my view of successful people over the years has changed. So when I was 18 working at a accountancy firm, my vision of a successful person was a partner who's 45, got a Range Rover. Yeah. And it's like, but now my vision, like, they've slogged for 25 years to get there. Like, just slog that. Yeah. Like, but now my view of a successful person is someone who's, started the business and has grown it well, done a good job, maybe exited. And even in school, I wasn't jealous of footballers. I wasn't jealous of certain people. I was jealous of people who ran their own businesses because I wanted to be like them.
Yeah, and I've got perfect point on that. One of that I had the exact same view, and that was for me. I was like, I want to be partner. That was it. Of course. Now, when I speak to my accountant, like, I first met him a couple of months after starting my business, and he said to me, he was like, because when it was struggle time, I was like having these doubts, and I was like, I don't know if I made the right decision. He went, right, I know someone who works at the Big Four, partner at the Big Four, and he gets around about, I think he said something like just over 300 base, and then he comes out like, he can come out with up to like 700 after bonus. Now, he said, that guy, he lives in a dead nice house, kids are looked after in terms of school and stuff like that, they don't have to worry about anything, but his family fucking hate him. He spends no time with the family. He works 7 days a week. He said his wife fucking hates him. And it's like, so you can be earning all that money, but then if you've got no time, you've got no means to actually be able to enjoy that money, then I'd much rather earn 200k a year but then be able to do whatever I want than 700 and be miserable. Yeah. 100%. And that's where I think when you do start your business, that's where it does, you're right, it changes. Your view of success changes as long as you can have a certain level of freedom, because what's the point of having money if you can't even actually enjoy it?
Yeah. And I think also that partner is on that amount of money, not sound disrespectful, but how much has he had to drop his pride in that time? He had to got to make the right people happy. He's got to schmooze the right people. He's got to lick arse a bit to get there. He's got to Whereas like if you run your own business, your destiny's in your control really.
Yeah.
So you don't have to answer to anyone really. I just think it's a better way of doing it. But don't get me wrong, that route is good for some people. Like we say, we love the structure and stuff.
Yep.
Could be good for us, but I think it just takes too long and there's too many. Yeah, it's just not for me anymore.
Agree. And I'd say this bit was one of the best conversations, probably the best conversation we've had to date, in terms of like how it's flowed and everything.
Oh,
so
nice
yeah,
one.
thanks guys.
I've enjoyed it.
Really good. One question, didn't ask it earlier. In terms of a property deal, what's the most you've made on one property deal?
So obviously we've only done today at HMOs. I'd say maybe about 80 grand.
Bloody hell.
Yeah, which ain't bad for, just a house in Lancashire.
Yeah.
But obviously as we get bigger into the blocks and stuff, the more money go in, the margin's bigger.
Yeah.
Or the margin's the same, but 'cause it's more in your margin, the actual amount's bigger.
Yeah.
So, you on a big block, a couple of million quid, you could be I think your magic number's 25% margin.
Mm-hmm.
You can do that, you're winning.
Yeah. I think, a good point on that is it's weird, isn't it? Because a lot of work went into that, but also at the same time, it wasn't like crazy. It wasn't like strenuous sort of stuff, because when, like we went into earlier, when the business is systemized, then there's people that can do certain jobs within that process for you. So, making that on one deal, it wasn't actually, I don't want to sound like a dick, it wasn't hard at all.
Yeah.
It was just like any other deal that you do. Yeah. But because you've got good people doing the things and you've already put that groundwork in, like we put groundwork in for 12 months before, with everything, finding investors, finding finance, finding the exits and things like that. All that groundwork goes into making that sort of cash on one deal.
But saying that, mate, it's like, you think about this one-man bands who do what we do, they could do 2 houses a year and make 100 grand a year. I'd say actual hours put into that, the 2 houses, could be, you're talking one house, 40 hours, so 1 week's work maybe. So you could do 2 weeks work, pure graft, to make that money.
Mm-hmm. I genuinely think property is a cheat code.
Yeah.
And the thing is, like, we're in a different space. So we're in the care space. So our deals are structured a lot differently.
Yeah.
Than people that are doing like luxury residential or flips or things like that. But yeah, I think especially if you're going flipping houses and things like that, I genuinely think it's a cheat code to making big money, just because it's, like Adam said, you can spend in total probably about a week flipping a house, because you're not there with the joiner putting a door on. You're just getting a joiner to come around and do everything for you, getting a plasterer to come in and do it, getting a painter, and then get a interior designer to come and stage the house and sell it to an estate agent. Like, you don't even sell it. You don't even buy it. All you do is give them money, get your solicitors to buy it. So it's like, you can do a week's work and you can make insane money and do that 3 times a year, and you can make 150 grand a year.
I get asked this question a lot. There might not be a right answer, but if someone was wanting to get into property right now, how much money do you think they would need at a minimum?
You don't need any like personal cash. So like, if you had a couple of grand in your bank, doesn't mean you can't get into property. It's not like when people say you can do a no money down deal. That's a lie. That's like clickbait. By that, it means like none of your own money. Like, you can go and raise finance from other people. So, you might go and raise 100, 150 grand and give the guy 10% back over a year and do a flip with it and make 25, 30 grand on a flip. So you don't actually need any of your own money. But one, obviously, caveat to that is then you need the knowledge to be able to go and raise the finance.
Yeah.
So I probably would start off sourcing again. If you didn't have your investors, I'd probably co-source, whatever they call it, with people who do have investors. But just learn YouTube. You can learn every single thing you need to know in property on YouTube, without a doubt.
I think one thing I saw, just on what you said then, for the people watching like, who are young, what I'd do is, the sourcing for us helps us gain the knowledge and stuff. That wasn't a moneymaker. But what I'd do is, if you know someone who's quite wealthy and say, look, I want to get into property, I want to work with you, use your money, we'll go 50-50. Like, I don't know, it could just be your mate's dad who's made a bit of till. He might have 100 grand in the bank. Well, just say, look, I've got this idea. I want to go and buy a property, do it up, renovate it, flip it. I've not got the money. I'm going to take care of everything, take care of the whole process. You know, I'll give you the deal. I'll let you do your due diligence so you can okay it to make sure everything I've said stacks up, and say, well, that's JV. How many, you know, as a 18-year-old there, if you can make 30 grand on a flip, you made 50, and you do that's 15 grand for you.
Yeah.
That's good. But the key is just, you know, being a good guy and just trying to gain that trust at the outset. Prove what, you know, go on courses, prove that you've been been researching the space. Don't just go in empty-handed, you know, blind, because you've got one shot at trying to make that guy trust you. But again, I wouldn't go out to, you know, if you can somehow know somebody who's got that money, a mate's dad, a family member or something who trusts you, there's a bit of trust there, try and do it that way.
Yeah. And I wouldn't advise people when they save up, say save up 10, 15K, I wouldn't, you know, something I wouldn't do is put that into a buy to let property that's just going to cash flow me like £500 and then save up another 10, 15K. You're not going to make any money doing it that way. It's just simple as that. You need to turn that 10, 15K into 30K by flipping. Or if you're doing that sort of thing, refinancing and pulling your cash back out.
Yeah, build your pot, and then the people who want to, the people who want to invest for cash flow, they're the people who've already made their money.
Yeah.
And I get, well, if you're at a certain point, if you can, you know, like you've got with your dividends covering your salary, if you can build up a pot big enough in property where your cash flows equals to what your living costs are, brilliant. You're onto a winner there.
Yeah. Good note to end it on, guys.
Yeah. Sam.
Great podcast. So yes, thanks for coming on, guys. There's absolute ton of value in there, guys. Property, but also mindset related as well. So make sure to hit the subscribe button. We'll be back very soon. We've got a couple of other guests lined up. So stay tuned. Cheers, guys.